Hey traders! Welcome back to Trader DNA. In today's video, I'm going to show you one of the most powerful indicators that can accurately detect trends and reversals. And the most incredible and most important part, this indicator is non-repainting. That means once it generates a signal, that signal is final. If a mistake happens, the incorrect signal remains visible. It won't disappear or get replaced with a new one. Now take a look at this. Right here we have two signals appearing close together. This is great news. Why? Because it means that if your position based on the first signal was incorrect, you could immediately exit and follow the new signal. That way you recover losses quickly and jump right back into profit. And this? And this. Consider this indicator as a special gift for all of you. And my goal is simple. I hope this special tool makes it easier for you to find the best trading signals, whether you're trading Forex, stocks or crypto. But before I go even deeper into how this powerful indicator works, let me first show you exactly how it provides highly accurate trading signals. Alright, let's break this down step by step. I'm going to walk you through the three key indicators in this strategy one by one so you fully understand how they work and can fine-tune the settings to match your personal trading style. Now here's the deal. The real power of this strategy comes from the two primary indicators in the main chart window. Profitable Strategy Indicator 1 and Profitable Strategy Indicator 2. These two do the heavy lifting, but in the sub-window you can add an extra layer of confirmation with any of your favorite indicators. RSI, CCI, MACD, you name it. There are tons of options available online, so feel free to customize. Let's start with Profitable Strategy Indicator 1. This indicator acts as a dynamic support and resistance zone, and it's the foundation of our analysis. Now here's something critical. You can't modify the core calculations of this indicator because its role is to provide a stable, reliable reference point. The only thing you can adjust is the number of bars it analyzes, or N bars. In this example, we've set it to 3000, meaning it calculates flexible support and resistance levels based on the last 3000 candles. Now, here's what I've discovered through my own experience. Whether you set a high or low N bars value, it won't affect your buy or sell signals. Why? Because this support and resistance framework is based on a fixed calculation formula, meaning it doesn't change. And here's the best part. The signals it generates are final and non-repaint. That means once a signal appears, it stays there. No misleading changes, no surprises. This is absolutely crucial for market analysis because you need a solid fixed foundation to base your decisions on. Before you even apply this indicator, you can already be confident that it provides real actionable insights, not just random noise. Now let's take a look at how Profitable Strategy Indicator 1 actually maps out market movements. Let's break this down with a real example. Take a look at Profitable Strategy Indicator 1 in action. It does an incredible job at defining trend boundaries with precision. Right now we're looking at a monthly time frame. And here's what's truly impressive. From 2006 all the way to today, this indicator has consistently helped us map out market trends and pinpoint key support and resistance levels with accuracy. Now think about what that means. This indicator has been a reliable assistant in trend analysis. Whether you're trading on the monthly chart, daily chart, or even the 4-hour chart, this tool gives you a clear structure to navigate the market with confidence. It simplifies decision-making, allowing you to trade with greater clarity and precision across different time frames. Now, let's move on to the second example. This time, we're looking at a 1-hour H1 time frame. Take a close look at this chart from February 3rd all the way to today. You can see how Profitable Strategy Indicator 1 has provided highly reliable trading guidance. For me, this indicator has been an absolute game changer. It significantly simplifies market analysis and helps me execute entries with precision and confidence. And here's what I truly believe. If this indicator has made my trading easier and more effective, then I'm confident it will do the same for you. Now, let's dive into the third example. This time, we're analyzing a daily time frame chart. From May 6th, 2024, all the way to now in 2025, you can see how Profitable Strategy Indicator 1 has consistently provided highly accurate trend guidance. And here's the key takeaway. Your job isn't to force trades, it's to find the perfect timing. All you need to do is identify the most advantageous entry points by zooming into smaller time frames, where precision can make all the difference. As I mentioned earlier, Profitable Strategy Indicator 1 serves as the foundation of our trading analysis. It's simple, powerful, and incredibly reliable, exactly what you need for a solid market structure. But now, let's take it one step further. I'm about to introduce you to Profitable Strategy Indicator 2, the tool designed to sharpen your entries and help you maximize every opportunity in the market. Profitable Strategy Indicator 2 shares similarities with the well-known smoothed Heikin Ashi, but with the right settings, this indicator becomes an incredibly powerful weapon for both Forex and stock trading. Now, take a look at this example. Notice how effortlessly it reveals the trend, whether the market is in a strong bullish move, a clear bearish phase, or stuck in indecision. With just a glance, you can instantly gauge market conditions, giving you a major edge in your trading decisions. There are two crucial things I'm about to show you about the Profitable Strategy Indicator 2, and trust me, you don't want to miss this. First, we'll dive into how to properly set up this indicator for maximum accuracy. Then, I'll break down exactly how to read it so you can spot high probability trade setups with confidence. Let's start with the first part, setting up the indicator correctly. First, we can customize the color and thickness of the indicator candles, not to change the data, but simply to make it easier and more comfortable to read on the chart. For example, let's adjust the candle body size from 5 down to 4. And just like that, here's the result. Much cleaner, much easier to analyze, right? Now, let's move on to setting the indicator's analysis period. Here, I'm using a 10-period setting to focus on short-term market conditions because the overall trend is already clearly identified by Profitable Strategy Indicator 1. And here's what the 10-period setting looks like in action. Incredible, right? It delivers precise, powerful insights that make analysis even more effective. Now, let me show you exactly how to set the indicator's period, and more importantly, how it impacts what you see on the chart. First, let's start with the 10-period setting. With this setup, the indicator begins to resemble Heikin Ashi, but there's a key difference. Instead of overlapping the candlesticks, it's positioned alongside them, because this indicator calculates its bars based on multiple periods of price action. In contrast, a traditional Heikin Ashi bar only analyzes a single candlestick at a time. This indicator is incredibly flexible. You can use it just like a traditional Heikin Ashi indicator by setting the period to 1, keeping it simple and straightforward. But here's where it gets even more powerful. Increase the period, and suddenly it transforms. Now, it acts as both a Heikin Ashi indicator and a moving average, giving you a deeper, more reliable trend analysis. Let's put this to the test. We'll set the period to 20 tar and see the results, and just like that, you can instantly spot market trends with incredible accuracy. It's like having a roadmap to profit right on your screen. Now, let's take it up a notch. We're setting the period to 50, and look at this. You can immediately see that trend reversal signals are becoming less frequent. What does this mean? Simple. With a longer period like 50, you're filtering out short-term noise, which massively increases your chances of catching big, profitable moves compared to shorter periods like 10 or 20. But we're not stopping there. Let's push it further, 100, 200, even 250. Watch how the indicator evolves and smooths out the trend even more. Incredible, right? This kind of precision is what makes this tool so powerful for traders looking to stay ahead of the market. Right now, I'm going to show you exactly how to read the Profitable Strategy Indicator 2. This indicator is based on 3 key candlestick patterns that every trader must understand to interpret what's really happening in the market. That's why I use a 5-period setting in this strategy. It provides calculations that are far more aligned with actual market conditions. If the period is set too high, The candlestick formations produced by this indicator lose their ability to reflect the real state of the market. Through extensive testing, I've found that 5 is the most logical choice. It analyzes a small but crucial set of 5 candles, yet still effectively highlights the midterm market trend, which we previously discussed using indicator 1. Now, let's dive into these 3 essential candlestick formations and what they mean for traders. 1. Indecision candle. Let's start with the indecision candle. You'll notice that this candle has wicks on both sides, but one wick is significantly longer than the other. If the upper wick is short and the lower wick is long, this is a bullish indecision candle. Even though this candle represents market hesitation, it still provides critical insight. It signals a bullish tendency in the market. While traders shouldn't enter a trade immediately, this candle serves as an early indication that a potential buy opportunity may be forming. Now, if the lower wick is short and the upper wick is long, this is a bearish indecision candle. The concept is the same, but in this case, the market has a bearish bias. So what's the key takeaway? Indecision candles are a powerful tool because they signal moments of uncertainty that often lead to significant market movements. When one appears, the market is essentially at a crossroads. Will it continue the current trend, or is a major reversal about to happen? Recognizing these signals allows traders to prepare for potential trend shifts before they fully develop. Number 2, weak trend candle. Now let's talk about the weak trend candle, a crucial signal that helps traders understand whether a trend is still valid but temporarily losing momentum. This candle has a small body with a wick on one side, indicating that a trend has already formed but remains relatively weak. There are 2 types of weak trend candles. 1. Bullish weak trend candle. 2. Bearish weak trend candle. Bullish weak trend candle. A bullish weak trend candle is identified by a small body with a lower wick. The size of the body can expand or shrink. The larger the body, the stronger the bullish trend becomes. Conversely, if the body starts to shrink, it signals that the bullish momentum is weakening. Bearish weak trend candle. A bearish weak trend candle has a small body with an upper wick. Just like the bullish version, the body size can fluctuate. A growing body indicates strengthening bearish momentum, while a shrinking body suggests that the bearish trend is losing steam. How to use the weak trend candle in trading. This candle is incredibly useful for traders who are already inside the market. Let's take an example during a bullish trend. Suppose you entered a buy position here. The price moves up quickly, but then suddenly dips. Now, look at what happens. A bullish weak trend candle forms. At this point, some traders might panic and exit the market too soon, fearing a trend reversal. However, the presence of this candle tells us that the overall trend is still bullish, just temporarily weaker. What should you do? Instead of closing your position prematurely, you hold your buy trade since the trend is still intact. And if price action confirms continued upward movement, you can even add a second buy entry right here after the formation of a bullish engulfing pattern. Recognizing trend weakness versus exit signals. As the trend continues upward, we notice another bullish weak trend candle. Remember, this is not an exit signal, it's just a sign of temporary weakness. However, if you're looking for a sell entry, you should only act if price action confirms a bearish reversal pattern. Now, here's the key moment. Right here, a bearish weak trend candle forms. This is the true exit signal. It indicates that the profitable strategy indicator 2 is warning traders that the market may be shifting into a bearish trend. Similarly, after you enter a sell trade and price starts to decline, it may briefly move up again. But if a bearish weak trend candle forms, you know that the bearish trend is still in play, so there's no reason to exit yet. The right time to exit, or that would be here, when a clear bullish candle forms, signaling a potential reversal. Number 3, strong trend candle. Now let's talk about the strong trend candle, a key indicator that signals when a market trend is at its strongest. This candle is easy to identify because it has no wicks on either side, a sign of pure momentum in one direction. A strong bullish trend candle appears as a solid blue candle with no wicks at the top or bottom. A strong bearish trend candle appears as a solid red candle, also without wicks on either end. Now, here's something crucial to understand. A strong trend candle is not an entry signal. Instead, it tells us that the current trend is extremely strong and likely to continue. So, what should you do when you see one? If a weak trend candle of the same color forms right after a strong trend candle, it often means the market is just taking a short breather before continuing in the same direction. How to trade using the strong trend candle? When you spot a trending market confirmed by a strong trend candle, your job is not to enter immediately, but to wait for the next opportunity. Here's the smart approach. 1. Wait for a weak trend candle to form. This signals temporary exhaustion, not a reversal. 2. Look for a price action pattern that aligns with the established trend. 3. Enter the trade with confidence, knowing you're trading with the momentum, not against it. This is what we call a high probability signal. It's simple, it's powerful, and most importantly, it's highly effective. See that? Clear, precise, reliable. That's the strong trend candle in action. Once you master this concept, you'll be able to time your trades with precision, maximizing profits while keeping risk under control. Combining profitable strategy indicator 1 and profitable strategy indicator 2 for high accuracy entry signals. Now let's take things to the next level. I'm going to show you how to combine profitable strategy indicator 1 and profitable strategy indicator 2 to identify high accuracy entry signals. Of course, this combination can be applied to various trading strategies, but today I'm going to introduce a strategy that is not only highly accurate, but also incredibly simple to understand. This means you can use it effectively for manual trading or even implement it into an automated system like a trading robot or expert advisor. This high accuracy trading signal is based on everything we've learned so far about profitable strategy indicator 1 and profitable strategy indicator 2. Now here's the key insight. These two indicators share a critical similarity. They both have the ability to determine market trends. Profitable strategy indicator 1 excels at identifying medium-term trends with high accuracy, and most importantly, it is non-repaint. This is a major advantage because it ensures that past signals remain valid. However, this indicator does not measure trend strength, which is exactly where profitable strategy indicator 2 comes in. Profitable strategy indicator 2, on the other hand, not only determines trend direction but also evaluates its strength, whether the market is indecisive, weak or strong. This is a powerful capability that profitable strategy indicator 1 does not have. However, if you try to extend the period settings on profitable strategy indicator 2 to analyze longer-term trends, its accuracy declines. That's why combining these two indicators creates a perfect synergy, where one compensates for the other's limitations. Why this strategy is so powerful? Now you can see why I say this combination is incredibly effective. You get accurate non-repainting trend identification from indicator 1, precise trend strength analysis from indicator 2, a strategy that is easy to understand and apply, whether manually or in an automated system. This is a highly reliable trading strategy that can significantly improve your market timing and decision making. Once you master this, you'll be trading with confidence using tools that actually work. Alright traders, let's break this down step by step. Today, we're diving deep into this strategy with a real buy entry example, so by the end of this, you'll know exactly how to apply it across Forex, stocks, and crypto markets with confidence. But we're not just talking theory here. You're going to see this strategy in action, so you can truly understand how it works and execute it like a pro. Let's get started. Look at indicator profitable strategy 1 and indicator profitable strategy 2. If both are blue, that means the market is in a confirmed bullish trend. This is your first trading rule. If this condition isn't met, we don't move forward. Simple as that. Step 2. Identifying strong bullish momentum. Now here's where things get interesting. If indicator profitable strategy 2 forms a strong bullish candle that tells us the uptrend has strong momentum. This is your second trading rule. Not only is the market in an uptrend, but the buying pressure is strong. But hold on, does this mean we enter a trade right now? Not so fast. Step 3, avoiding premature entries. Now, here's the key moment. When do we actually enter the trade? The best time to execute a buy entry is not when the market is surging, but after a slight pullback. Specifically, we wait for the market to weaken temporarily, which is confirmed by the formation of a weak bullish candle on indicator profitable strategy 2, while indicator profitable strategy 1 remains blue. This is your third trading rule. Let's recap to make sure this is crystal clear. Rule number 1. Both indicator profitable strategy 1 and indicator profitable strategy 2 must be blue, confirming a valid bullish trend. Rule number 2. Indicator profitable strategy 2 must form a strong bullish candle, confirming strong buying momentum. Rule number 3. The market must experience a slight pullback, forming a weak bullish candle, creating an optimal entry point. Following these rules ensures that we don't chase the market, but instead enter at the right time with a strong risk-to-reward ratio. Now let's move to the final step, waiting for the ultimate confirmation before pulling the trigger on our buy entry. We need one final confirmation. A price action pattern signaling that the bullish trend is resuming. This is trading rule number 4. We don't enter until the market confirms that buyers are stepping back in after the pullback. Once we see this price action setup fully form, that's our green light. The moment this signal is confirmed, we execute the buy entry at the opening of the next candle. No hesitation. As you can see, this strategy isn't just simple, it's incredibly precise and highly effective. By following these 4 rules, you're making calculated high probability trades instead of guessing or chasing the market. Stick to the process, trade smart, and let's dominate the charts. Alright traders, now let's flip the script and break down how to execute a sell entry using this powerful strategy. Just like before, we're following clear, precise rules to ensure we enter the market at the right moment, not too early, not too late. Let's get started. Step 1. Confirming a bearish trend. First things first, we need to confirm that the market is in a downtrend. Look at indicator profitable strategy 1 and indicator profitable strategy 2. If both are red, that tells us we are in a valid bearish trend. This is your first trading rule. If this condition isn't met, we don't proceed. Simple as that. Step 2. Identifying strong bearish momentum. Now let's take it a step further. When indicator profitable strategy 2 forms a strong bearish candle, that confirms strong selling pressure in the market. This is your second trading rule. The downtrend must be strong before we even think about entering a trade. But hold on, this is not our entry signal. Step 3. Mastering the sell entry. Timing is everything. Just because you see a strong bearish candle doesn't mean it's time to hit sell, not yet. If you enter now, your stop loss zone will be too wide, which means your risk to reward ratio won't be in your favor. And in trading, risk management is everything. So when is the perfect time to enter? The best sell entry happens when the market experiences a temporary pullback, forming a weak bearish candle on indicator profitable strategy 2, while indicator profitable strategy 1 remains red. This is your third trading rule. We're looking for a slight slowdown in price before jumping in. Let's break it down once again for clarity. Rule number 1, both indicator prof strategy 1 and indicator profitable strategy 2 must be red, confirming a valid bearish trend. Rule number 2, indicator profitable strategy 2 must form a strong bearish candle confirming strong selling momentum. Rule number 3, the market must pull back slightly, forming a weak bearish candle, giving us a better entry price. Final step, the ultimate confirmation. Now, before executing the sell, we wait for a bearish price action pattern to confirm that the downtrend is resuming. This is your fourth trading rule. Once that pattern is fully formed, we enter the trade at the opening of the next candle with confidence. As you can see, this strategy is simple yet incredibly precise. When followed correctly, it eliminates guesswork and ensures that every trade is based on logic, not emotions. Where is the most profitable place to set your stop loss? One of the biggest advantages of this strategy, something most trading strategies don't offer, is how easy and precise it makes finding the optimal stop loss placement. With this approach, every time you enter a trade, you automatically have 3 key stop loss levels to choose from. The nearest swing high or swing low, a strong technical level that many traders use, above or below the candle from profitable strategy 2, providing a strategic stop loss based on recent price action, above or below the profitable strategy 1 indicator, giving an additional level of risk management. And here's what's exciting. I'm going to show you exactly how to apply this strategy correctly in this video, step by step. How to use the CCI indicator in this strategy. Now let's talk about how the commodity channel index works in this strategy and why it's such a powerful tool for identifying high probability entry signals. Even though CCI is a supporting indicator, it can significantly simplify your decision making when it comes to finding the perfect entry. And in this section, I'm going to show you exactly how to read and use it to maximize your trades. Take a look at this. The CCI indicator has 3 key levels you absolutely need to pay attention to. -100, 0, +100. These levels are critical when determining whether a trade setup has a high probability of success. How to use CCI in a bullish trend. If the market is in an uptrend but starts to pull back and the CCI line drops below 50, then when it reverses and crosses back above 50, that's a valid buy signal. However, if during the pullback the CCI remains above 50, then the best moment to buy is when CCI breaks above 100, confirming renewed bullish momentum. Now let's dive into the charts and I'll show you how to put this into action. Take a look at this chart. You can clearly see profitable strategy 1 and profitable strategy 2 highlighted in blue. That means the first trading rule is met, confirming that the overall market trend is bullish. Now, within this bullish trend, we can see a strong bullish candle forming on profitable strategy 2. This signals that the market is not just bullish, it's in a strong bullish trend, and just like that, trading rule number 2 is confirmed. Now let's move forward and see what this means for our next trade setup. Identifying a high probability buy signal. Now, here's where things get really interesting. At this point, the market is showing trend exhaustion, which we can see from the formation weak bearish candles, red, and weak bullish candles, blue, on profitable strategy 2. This indicates that momentum is slowing down. But here's the key detail. Profitable strategy 1 remains below profitable strategy 2. And that's what makes this setup so powerful. Why? Because when a buy signal forms in this condition, it's a high probability buy signal. This confirms trading rule number 3, bringing us one step closer to a strong trade setup. Now let's move forward and see how we can capitalize on this opportunity. Now let's take a closer look at the CCI indicator in the sub-window. Here's what we're seeing. The CCI line has dropped below -100, signaling that the market is in an oversold condition and could be gearing up for a reversal. So what's the key trigger? If the CCI line starts moving upward and breaks above the 50 level, that's our first confirmation for a buy entry trade. But here's where it gets even stronger. When the profitable strategy 2 candle turns blue and the CCI line pushes above 50 or even breaks past +100, we now have a high accuracy buy signal. This setup aligns multiple confirmations, making it a powerful high probability trade opportunity. Now let's break it down even further and see how we can take full advantage of this setup. Where should you place your stop loss? Now let's talk about one of the most important parts of any trade, stop loss placement. As I mentioned earlier, this strategy automatically provides 3 potential stop loss levels. 1. The nearest swing low, a classic technical level. 2. Below the candle from profitable strategy 2, offering a structured risk point. 3. Below profitable strategy 1, acting as an additional layer of protection. In this case, the most optimal stop loss placement is below both profitable strategy 2 and profitable strategy 1, ensuring that we give the trade enough room to play out while keeping our risk managed. And because this is a high probability signal, we apply a 3:1 risk to reward ratio, meaning our profit target is set 3 times the stop loss distance. And then boom! The market explodes upward, continuing the bullish trend and smashing our profit target. This is exactly why proper stop-loss placement and risk management are critical to maximizing gains while minimizing risk. Now let's break it down further and see how we can repeat this success. Take a look at this chart. You can clearly see that Profitable Strategy 1 and Profitable Strategy 2 are both red, and that tells us something important. The first trading rule is met, confirming that the overall market trend is bearish. Now, within this downtrend, we see a strong bearish candle forming on Profitable Strategy 2. This signals that the market isn't just bearish, it's in a strong bearish trend with strong selling pressure. And just like that, trading rule number 2 is confirmed. Now let's dive deeper and see how we can take advantage of this setup for a high probability trade. At this point, we can see clear signs of trend weakening, evidenced by the formation of weak bullish candles and weak bearish candles red on Profitable Strategy 2. This indicates that the market is losing momentum, potentially setting up for a strong bearish move. But here's what makes this setup even more powerful. Profitable Strategy 1 remains above Profitable Strategy 2, and that's a key confirmation. Why is this important? Because when a sell signal forms under these conditions, it becomes a high probability sell signal. This aligns with trading rule number 3, increasing our confidence in the setup. Double confirmation with the CCI indicator. Now let's shift our focus to the CCI indicator in the sub-window. What do we see? The CCI line has climbed above the 50 level, meaning the market has recovered slightly, but here's the critical part. If the CCI line starts moving downward and breaks below 50, or even drops past minus 100, that's our sell entry confirmation. And here's the final piece of the puzzle. Once the Profitable Strategy 2 candle turns red and the CCI line moves below 50, or even plunges past minus 100, this becomes a high accuracy sell signal. Everything aligns for a powerful bearish trade setup. Now let's jump into the next step and see how we can execute this trade effectively. Stop loss placement. In this case, the most optimal stop loss placement is above both Profitable Strategy 2 and Profitable Strategy 1. This ensures that our trade has enough room to develop while still keeping risk under control. And because this is a high probability signal, we follow smart risk management by setting our initial profit target at 3 times the stop loss distance, giving us a solid 3-to-1 risk to reward ratio. And then, boom! The market dives further into the bearish trend, moving quickly toward our profit target and locking in our gains. This is exactly why proper stop loss placement and disciplined risk to reward ratios are key to long-term success in trading. Pretty straightforward, right? This strategy is not only powerful, but it's also highly reliable, as long as you stay disciplined and follow the trading rules I just explained. To make it even easier for you to master this strategy, I've prepared all the indicators and templates so you can trade with the exact same setup I've shown in this tutorial. You can download everything right now from the description box below. But we're not stopping here. If you want to dive deeper into Profitable Strategy 2, you need to watch this video next. It covers a highly effective strategy using the Heikin-Ashi indicator, which has a strong connection to Profitable Strategy 2. I highly recommend watching it because it will take your trading skills to the next level. So, click on the next video and I'll see you there.